Good evening, Dan Fitzpatrick here on Wednesday, January 25th, and a quick video here on McDonald's. Look, this thing, a lot of folks are saying, oh my gosh, it's topping. I even saw one person say it's imploding. And this tells you really what's been going on with McDonald's. I mean, this thing's been a crowd favorite for quite a while. And what you're really seeing here is just a normal, healthy pullback. In fact, I noticed on CNBC this morning, they were talking about it on Squawk on the Street. And Kramer, he was saying that he thinks people are wrong from walking away from it. We don't really even, we don't have to rely on anybody's opinion other than the markets, and that leads us to the chart. Here's the thing. Look at the 50-day moving average. This sucker doesn't hit the 50-day moving average that often. The last time it hit it was back in October, okay? And the stock was at 87 bucks or whatever it is. So this, in my view, is a rare opportunity to buy at a low price relative to the trend. It's not at a low price. This would be a low price. But it's a low price. It's at a low price relative to the trend. In other words, over the last 50 days of trading, the average price is right there. Since the stock is moving higher, being able to buy it at an average price over the last 50 days is known as a good thing. So what do? We look at our support level right here, about 97. We'll call it 98 bucks. We're viewing as support. So you go ahead and take this stock now. Take as much as you want, as long as you know you're only risking what? We'll say $2. So you put a stop. 99.23 is where you're buying the stock, so you put a stop at 97.23, somewhere right in there. So you're risking $2. Divide how many dollars you actually want to risk on the trade by $2. Now you know how many shares you can buy. That's the way you make a trade. It's just very down and dirty, very simple way to buy a stock that you think is going to, you're going to make money on. You think it's in an uptrend. It's giving you a good, a pretty good buying opportunity, you think, but you're not sure. So you just simply define your risk and then look at the share size, look at the spread between where you're buying it and where your stop would be. Here it's $2. Now you look at the dollar amount. How much money am I willing to lose? Well, let's say you're only willing to lose $100. Then you're going to buy 50 shares. And that's all I got to say about this one. Okay, members, get over to the strategy session. We're looking at Apple as well as a few other things and how to trade that. And I've also got some stocks that are what I would call coiled springs.